Okay, 10.9 is creating an income statement. To create an income statement and determine a company's profit or loss, we'll go through the process step by step using hypothetical data. An income statement, also known as a profit and loss statement, summarizes a company's revenues and expenses over a specific period, typically a fiscal quarter or year, to calculate the net income, profit, or loss. Suppose we are creating an annual income statement for a company named Example Enterprises for the year 2024. Here is some relevant data. We've got our total revenue at 500,000, cost of goods 300,000, our operating expenses, which includes salaries and wages, rent, utilities, marketing, depreciation, and other operating expenses. We have our interest expense and also our taxes. Okay, step one is telling us to calculate our gross profit, and it's telling us how to do that there, where our gross profit would equal our total revenues minus the cost of goods sold. Step number two is to calculate your total operating expenses, and that is going to be equal to your salaries plus your rent, utilities, marketing, depreciation, and your other expenses. Step number three, you're going to calculate your operating income, and that is figured by taking your gross profit and subtracting your total operating expenses. Step number four is to calculate your net income before taxes, and you get this by taking your operating income and subtracting your interest expense. Step number five is to calculate your net income, and that is figured by your net income before taxes minus your taxes. Okay, and then we have a statement actually listed below in a table there showing these amounts. Okay, so in all, it tells us at the very bottom the net income would be the $30,000. Okay, and you can go through and practice writing this out and figuring it using the numbers that were listed and plugging them in to each of those steps to get your cost. Make sure that they match up. Okay, summary. The net income for Example Enterprises in 2023 is $30,000. This positive figure indicates a profit, meaning the company earned more than it spent. An income statement like this helps stakeholders understand how revenues are converted into net income or a net loss, showcasing the profitability of the business during a period.